it.
Hello, how you doing? This is Brad Wiseman, and you're listening to Real Estate and You, where we like to touch on topics every so often. I don't want to say every week. It's every other week or every 10 days, whatever it is, whenever we come up with topics. So I have a guest with me today. His name is Justin Perella. You've heard him before, and he's just a great lender and friend, and he always gives me lots of information on the mortgage industry. So, Justin, are you there?
I am. Hey, Brad, how are you?
Good, good. You know, I could have swore we had a meeting today at 3 o'clock.
Yeah, you know what? What was that game that when we grew up? I think it was called Spy Hunter.
Yeah.
Do you remember the car that you used to press the button and oil would come out of it? Well, that was my car this morning.
Oh, gosh. No way. That's not good at all.
I apologize. Yeah.
Not good at all.
I need to get that closed up.
Yeah, hopefully you do. Well, so if you're looking at this live on Facebook, you're going to see that there's an empty chair. So that's just basically a memory of Justin and his car.
Oh,
so it's
put my picture out.
Yeah, I should have. So hey, Justin, we haven't talked for a while. I just want to find out what is going on in the mortgage industry. What are you seeing?
Sure.
You know, give us an update. We're now kids are back to school since last time we talked. I don't know where the rates are since last time we talked. So let's just start with rates. What are the interest rates doing?
Okay. They're still great. I would say on a 30-year fix, you're still looking at under 3. 2.875, 2.75 with good credit. And then the shorter terms obviously would be a little bit better. But refinances, some companies you want to be careful with on refinances because a lot of them we're being told have increased their rates a little bit to slow down the process. So we have not done that yet, but just make sure you're checking your interest rates on your refinances.
Yeah, that's good. So when you say a good interest rate, what exactly do you mean? Like, or what you said it's dependent on the interest, or not the interest rates, but dependent on the credit score. What is the credit score to get that good interest rate?
Right. That's a good question. So there's all sorts of tiers that go into pricing. One of them is credit score, but there are a few others. Let's just say it's your loan to value. So how much you're putting down when you buy the home, that's going to have some impact on your rate, as well as your debt to income. So
Okay.
the amount of income for the amount you're borrowing, that will also have an effect. But again, so if you're borrowing within your means, and we try not to let you do that. That's one of our jobs. So, we're never going to approve somebody that can't afford the house. But still, we all know what monthly payments we can afford, based on paper and off paper.
Yeah.
So if you're buying a Ford and your credit score, I would say, to reach that maximum low interest rate, you're looking at 760 credit score, 780 definitely. But again,
wow, that's pretty. That's actually pretty. That's up there. I mean, I know for a long time it was 720. I believe was the rate, was the number, and now you're saying 740, 760, 780.
Well, yeah, to guarantee the maximum lowest rate. But for example, a great rate right now on a 30-year is 2.875 to 2.75, and I can get that with a 720. I've done it for even lower, but if you want to get closer to the 2.6, those rates,
right,
the 780s are going to get you there.
I got you.
The
I got
absolute
you.
lowest.
Amazing. So what are you seeing? Are you seeing the market just kind of calming down a little bit since kids are back to school, or are you seeing still going bonkers? I mean, give me a little bit of a feeling for that.
Yeah. So the purchase market has slowed a little bit, and I know you wouldn't know that from the lack of inventory, but we are seeing purchases slow, but refinances are still going strong and probably will throughout, early next year. But the purchases, and this is almost a question for you as far as inventory, where you see it going, but there's still not a lot of homes out there, so we're seeing a lot of pre-approvals. But then when it comes to signing the agreement, we're still seeing 12, 13, 14 offers on properties.
Yeah, wow, yeah, that's true. I mean, we are still seeing that. Now, I got to say, for us, I think it's gotten a little bit little bit less. I think that the kids going back to school, I think obviously it's a big election year. There's a lot going on with that. And,
Sure.
that tends to take people's minds off of things. And obviously with the home purchase being one of the biggest purchases you make in your lifetime, you want to make sure that you're running on all cylinders when you make those decisions. So I get that. But I did see a little bit of a slowing, just a tiny bit. And I think, and that was right after school started, but I did see a little bit of an uptick in the past couple weeks. So it's hard to tell. I mean, like I said, the election's a big thing. We got that coming in 2 weeks. So I think after that passes, 50% of the country is one way, 50% is the other way. So once we get past that, I think we can all move on, and we have other things we can think about from there. What do you see? What do you see for next year as far as rates?
Yeah, it's funny. While you were saying that, I was actually about to say that I am very interested to see what they do right after the election, because that's going to be the tale. So I hate to balk on this or sidestep, but I think they'll stay low. I mean, they're not going to go from 3 to 7, but I'm interested to see which candidate wins and where they go. I have my thoughts, but they're completely political, and I wouldn't bring them up on here.
Gotcha.
But I have my thoughts which way they will go if one or the other gets elected. But again, I think it's going to be exciting. I guess it's not the word, but it's going to be interesting.
Interesting, yeah, and exciting. Depends on who wins. It depends on who wins. But that's kind of cool. So what are you seeing? Here's the other one that I've been, there's always a thing that comes up is the appraisals. Where are appraisals going right now? Are we seeing any issues with those, or do you think that's kind of calmed down a little bit?
Absolutely calmed down. And I'll tell you, a true fact is I think it was one of yours. It got an appraisal waiver, which means that the home was purchased below where the market value was based on the area. And I know that's because you did a great job for your client.
Well,
but
of course that's what it is.
Because the value was there, and they didn't need, and this wasn't an inexpensive home. So I was pleasantly surprised to see that. And the only thing I'm seeing, and this is more on your end, is still waived inspections and things of that nature. But from the appraisals, no, I haven't, knock on wood, had any issues.
Yeah, you know what? And I'm kind of surprised too. What's funny is I think that it's almost kind of now the appraisers almost are building in maybe some increase in value, and I had an appraiser on the show here, probably about a month and a half ago, and she said that they're allowed to, which really blew my mind. I never knew this, and I was not one that was privy to this information, but they're allowed to in an appreciating market. They're allowed to look at the appreciation over the last 6 months or 3 months and kind of build that into the last sale that happened, saying, okay, this one here in an appreciating market is now worth more than the sale that happened a month ago. And
that's great.
I was not aware of that. I always thought that
I wasn't.
I wasn't either. And I don't know if that's new or if that's because we have a trend of appreciation going on. And I think that might be what it is that because it's a trend that they're allowed to build that in, So I was surprised. So I have not seen near the issue with appraisals that I thought I would see. I really haven't. And it's good. It's a good thing.
Yeah. A case in point would be that earlier on, we were seeing them not increase. So now lately that maybe they are building that in because it is newer.
Yeah. It is interesting. So, so what, anything else that you can see coming up on the horizon? Is there anything changing? Anything we have to be like, oh man, you know what? This is gonna change our industry, or or is it just like you think we're gonna, obviously dependent on the election? And I always believe my experience has been, and I'm only 50 years old, but I've seen a couple elections. I've always noticed it gets really, really hyped up. Everybody's on each other, and social media, of course, has made that easier. And then all of a sudden, it's the day's over. You have about a week of people being a little upset because maybe their person didn't win. And then we kind of get back to just normalcy, So I think we build this all up, and I'm hoping that that's what happens again this year, that no matter who wins, we kind of all get ourselves back to normalcy.
No, I agree. Nothing really on the changes front. There was talks about some FHA's changes, but so far nothing. And I think that's a good thing. Because in our industry, and not so much yours, but our guidelines changed so much back in March, and I guess, it would have been early March when this all started, the COVID.
Yeah, I remember that.
I think people are still in shock of that and all the changes. So I would just say, still keep all your documents. Don't throw anything away, especially in this time of furlough. Any furlough letters you get from work, just try to document as much as you can if you're looking to buy or refi. And then if you don't need it, we don't need it. But
right.
we're over documenting everything now.
I've noticed that. So two more things. Yeah, I've noticed that. So two more things I have for you, and then we're going to wrap this up.
Sure.
Two more things. One is, are we still looking at 45-day settlements, or are we able to go 30 to 45 now?
Great question. Yeah, we're in the middle, I would say.
Okay, so 40 days would be good.
Yep.
Okay.
Yes, sir. Yeah.
All right, that's good.
Yeah, refis went from 2.5 to 3 months down to the 45 to still around 60 probably, but we can get them done if we have to. If there's certain instances.
Okay, cool. And one more question I have for you. The last question I have is do you think it makes a difference if somebody settles on a Friday, Thursday, Wednesday, Monday, Tuesday? Like, is it better for the for the person going to settlement to not settle on a Friday?
No, and that's we've discussed this before. I would stay away from Monday. That's about it.
Oh, interesting. Stay away from Monday.
Correct.
Oh, that's an interesting one.
Only because you're just coming off of a weekend, and I don't like early settlements either, just in case we're scrambling around. And this is mostly because of the verification of employment.
Right.
For example, I had one that closed the other day, and the employer just wasn't getting back to us. So that if that would have been a closing at 9 in the morning, we would have had to delay it. So we would have had to inconvenience parties. But because it was at 5 o'clock, we were able to get that. So Monday works kind of the same way. So I would say Tuesday, fine. Wednesday, Thursday, that's where, especially on refis, you'd want to put your closing there. But on purchases, it's really just comes down to what the client, wants to do, and as far as moving and all that.
Gotcha. That's great. So I'll tell you what, that was just good information. I mean, we try to do this every so often so that people are up on top of things. I did lose a little bit of my stream there in the middle, so I got up and I started it over again. I have to figure out some of the technical difficulties with live streaming. But it was still fun, and it was great talking to you, Justin. And next time, hopefully, we'll see you in here and you'll be on the screen with me.
Yeah, can't wait.
All right,
Thanks,
man.
Brad.
You're welcome. I'll talk to you soon.
All right, bye-bye.
So there you have it, a little update on Justin Perella there from the mortgage company. And we always like to touch base just to see what's going on. Things change so quick, but that's about it. I will see you real soon.